So welcome everybody, hello, it is 1800 hours on the 16th of March 2026. Hello Arthur, Peter, Sakthi and Judy, welcome to you. Thank you all for saying hello. I have two subjects to go through this evening and I think both are good topics, so be alert please. The world needs alerts apparently. Anyway, first up, an old saying I was discussing with Brian over the weekend, and it relates back to my group question about support and accountability. The saying goes that we can lead a horse to water, but we can't make it drink. Well, if the big dumb bugger then dies of thirst, in my eyes, it is his own fault. If a trader in the same vein then fails to take advice, read the notes or template strategy details that have been written, or watch the YouTube explanations shared for clarity, etc., then it remains the trader's fault when things go wrong. Simply trying to place blame or deny our own accountability, and note I say our own, not your own, our own accountability does not make that right or all right. Enough said? Well, I doubt it, and I'm sure it'll be a topic we revisit regularly, though hopefully not often, at least until traders, members, realise there are rules. The rules are designed to keep us safe. After safe, we can be profitable. Now, next up, many of you who were in, who attended my in-person classes for the initial course might remember my passion for mathematics and mathematical formulae since meeting Roy, who was my maths teacher for the accountancy qualification. Well, the passion never really died, and to this day, I suppose if I'm drunk enough, I will still try to create the formula for anti-gravity, or something else equally ridiculous. The Camarilla equation, however, is far from ridiculous, and after discussions during a session with the group in one of our live trading sessions on DAX last week, we're going to look at a bit of a revival of the spreadsheet that I used back in the early days of my own journey in technical analysis trading. I will add that during that session we managed to trade a predicted and hunted 120 pip move up on the DAX, or J40 if you prefer. So Rosa, welcome, good to see you on. Thanks for being here, Rosa. You might have missed a little introduction at the beginning, but nothing you can't catch up with later. Anyway, the advanced Camarilla equation can offer to us trade ideas to use as confluence in the next or the new hour, using the last hour of closed bar data. This goes back to our look left to be right ideology and the use of that Camarilla equation in order to confirm that our usual indicator-based strategy is following our mathematical rules. Now I'm going to open a spreadsheet and I'll spend some time updating it with the last hour of data for an open market. This one, for instance, the NAS. I will show you one that I have prepared earlier. I've got the YouTube thing open, I need that, but this is the one I want to look at. It's the Camarilla equation. And what I did with this so far, a bit earlier on, before we started, I keyed in the last hour open, high, low, close. That's this hour, the 15 to 1600, 15 to 1600. Where's my spreadsheet gone? There it is. So you can see the open 24706. It's around here somewhere. Now the problem is you're hiding what I need to see. 24706 was the open. I looked at an hourly bar to get it, to be honest. It's probably him then. 24706, high 24750 up here at the top, obviously. Low 24659 down here at the bottom. You can see it marries up with the 660 over here, a little bit below 659, and the close 24680. 686, so probably this bar around here. We key in the open, high, low, close, and it says go short at these levels, or these levels if you're using equation number 2, because there are 2 variations of the equation. I have them both. And then go long at these levels, and the first thing I want to do is show you that if those numbers agree with our signals, and I'll use just a drawing tool, because if I put a crosshair I think it'll hide this. We're looking to go short around 711 or 702. Well, there's 680, there's 700. Can we go long here? Well, no, this line is still in sell mode, so the longs are out of the question. But this short, I'm going to say it's at about 690 something. Oh look, a 694 we've got there, or a 710. We're going short at one of those levels, and these become our targets. 677, 69, 660, 635. Well, there's the 660. From here down to there are approximately, I don't know, from 690 to 660, there's 35 pips in there. The lower target, 635, it's there, it hit it. And if we look at 695 down to 635, well, that is 60 pips right there from this one, or from this one down to this one. So the Camarilla equation has in fact confirmed that that sell was doable. But then, in line with our usual course of business, we've got lower lows over here. I think we've got equidistant lows. Actually, no, they're lower lows, and they're still lower lows. But there's a bit of divergence within the indicator in here, in that these lines, well, they're not the same by any means. Notwithstanding, there could have been divergence on a higher time frame. But let's see what it says over here. Look, go long at 24,660 or 636 or 631. Now we've hit the 636, and we've come up and we've gone and got an RTF and a hopper and a buy signal at 660. Over there, confirmed, go long at 660. So we've got one bite of an apple and then a second bite of the same apple. Where are our targets from 660? Well, they're up here around 702, 711, 736, 735. They're all the way up here at these levels, they're right there, given to us by an equation that we don't even need to know the mathematics behind it. We just need to know that it really is a thing. So what I'm going to do now, I do believe that, there you go, there's a closed hour between 1700 and 1800. So yeah, I'm going to be lazy. I'm going to turn that 1 minute chart into a 1 hour chart. I'm going to bring back my spreadsheet, and I'm going to, it's this one, I'm going to highlight the last hour bar. Now this is going to be awkward. I'm going to have to take the spreadsheet off screen for a moment while I highlight the closed bar to get the levels, and we can check them in a minute. There you go. I'm highlighting that. I would need to highlight that square first. Escape, cell reference. Now I'll highlight that bar, and in that bar, oh bugger, there, that one, it's the closed bar, and it is an open 24688. You can all see that in my top corner, but bugger it, yeah, there you go, that's working. 24688, a high 24735. Oops, I'm writing it in the same thingy. 24688, 24735. If I could only type, I'm hitting the decimal point and all kinds of outlandish crap here. A low of 24664 and a close of 24693. Now I'll turn that back to a 1 minute chart. Have we got a 1 minute chart? Yes, we do. Cool. We've got the levels in, and I'll bring the spreadsheet back in so you can all view the open, high, low, close, open, high, low, close of the numbers I've just read out. Open, high, low, close. Now it gives us ideas. Now we can see we're in buy mode, so we don't want to be going long, and it's saying, what is it saying? It's saying, well, there's a long breakout at 732. We haven't quite hit that. We got a big round number. There you go. Go short though. We've got to go short there. We've got these go longs at 673. They came a bit early, didn't they? They're a bit early. Okay, so in this instance, that's not that helpful other than the upper levels, the 730 and the 764. Well, we haven't gone to the 764 yet. As always, the indicators outrank everything else. So whatever strategy of mine you're looking at, assuming you're looking at one of mine, and this is the old DT2 or Dynamic Edge or DWL3, however you came to me, that's how you recognize it. And I've hidden a lot of the bump off it, but you all recognize my MACD scalper pattern. You all know about the hopper. You all know about the green buy, green in the middle of the was it the double white lines right there? So you couldn't do anything but buy this, perhaps off a fractal, perhaps off a MACD scalper pattern. It doesn't matter. These are go short levels. In this case, the Camarilla equation has indeed been, well, bloody useless, other than giving us a ceiling of 732, which we've been to. You see, a breakout or stop. Stop as in stop loss or stop trading. It's hit that upper ceiling. Until it breaks it, we're not going to our 764. So what I might do is have a look at the Dow, and let's see if there was anything on the Dow that is agreed with, because remember, it's a guide. It is not a cast in stone. Your indicators are what is cast in stone. And I'm going to go from the Dow to an hour chart, a 1 hour chart. I'm looking for the open, the high, the low and the close. I'm clearing on that button first, and I want one of them, and I want to go there with it. I still want one of them, dude. Thank you. Over there with it. And what have we got? We got an open 46,951, 46,951, a high 47,028, a low 46,883. Oops, that's not the low. What have I done? Oh, I've whacked that. Let's see. 46951. I'm writing them all in the one square. Bloody nana. 4702. I'm going to say 47029 because it's 28.9. The low then of 46883 and the close 46943. Boom. I've now got me numbers, and I'm going to take that little crosshair off and put it back to a 1 minute chart. And are we on a 1 minute chart? We are. We can go back here now and say, well, do you tell us anything? There it is, open, high, low, close. They matched with the hourly some moment ago. And we can say we've been going long from about 46,960. Again, we haven't really got it here. We got a 46,903 that we can go long at. Well, it came early. So in this case, again, it's too early. Nevertheless, is it lunch hour or something in the USA, or was it lunch hour? Is that why we're seeing it not really make a lot of sense? Because we saw it make a lot of sense with the closed hour on the first NAS trade I looked at. We've got one made up for the DAX. We got one made up for the FTSE that we used last. Well, we used the DAX last week. But has anyone got any questions on it so far? We are 13 minutes into a recording, and obviously I would like to take questions based on the Camarilla equation. How can I get that spreadsheet? Says Zach, no problem. After the session, I'll be dropping it in the relevant places. You do actually have an old copy. This is just an updated version where we took out the data for the 4 hourly and for yesterday. That's all I've done with it. I've deleted all the excess data that we sort of weren't interested in anyway. Hang on, I want to highlight the open. I'm going to have a run of it on the DAX, the last closed hour. So we've got the 23581, a high of 23632. And look at that, I'm managing to get them all in the right boxes this time. 23569 and 23592. And I suppose my point here is that for anyone who has looked at my, those YouTube sessions where we do a little taster of our live trading sessions, well, this spreadsheet might just help you. We've got that data, that 17 to 1800 data entered. and it's telling us, well, we could go long at 574 or 580 or 586. And if we have a look over here, what do we got? We got a 593. It's a hopper combo around the 594. Let's see the spreadsheet again. 586, 597 at a push. So we've got a long signal here, but what do we got that we wouldn't have otherwise? We got these. We got targets, 626 and 655 up at the top. So if you're in from anywhere here, you're in at 595, and you know you're looking for the 626. If we struggle at 626, which there was a number on that sheet that gave it, you pull the plug. And you pull the plug for what? 30 pips? 30 pips, 30 DAX pips at 1800 hours on a random Monday evening. Well, there you go. That's what it is. That's what this spreadsheet is designed to do. It's designed to help you mathematically look at things and review them in a way that guides you. This tells you that your maximum risk should be about 11 pips and your maximum target should be about 63 pips. I don't see that there's 63 pips in that, but there's 40, and I suppose it isn't over yet because you could fib that and take the fib continuation. Now that I've said it, kind of have to put the fib on the screen, don't I, to see if there is indeed a fib continuation. There we are. Well, we've bounced off the 50. It is a fractal. It did say you can try. It isn't green over there, so it doesn't say you can try yet. We need some green over here, or we'd need our trusted TSI, which would give us a different value hopper. For now, it's faffing around in the range, and we're looking for a reason to be able to continue with this. I'd probably want to ladder that fib. I'll just show everybody or remind everybody what a laddered fib looks like. We go from the 61.8 of the first fib up to the same upper anchor there, and now we've got a tighter entry at 623, invalidation at 616, and your first target 640, or if you like that, what was it a 636? It was a 626 and then a 655. So there you go. There's the actual laddered fib right now delivering the goods. That's how all of this comes together. I'm kind of glad that happened while we were looking at it. We'd be watching that level. Someone's going to type and scream, why would we be watching that level right now? Why would we be saying, well, I went in at 623, I'm not going to take a loss based on, what's the pattern? Someone tell me what the pattern is. You buggers, you're taking far too long to like to. Thank you, Stephen. There you go. The M. Stephen has written the letter M. So if we come back to anything resembling danger from where we got in, we pull the plug and we take some pips. Otherwise, we're still looking for 40, 44, 51, and what was the number? 655. So just up above this level here somewhere. And that's it. It all still works. It ain't broken. It works beautifully, and we can measure it a bit better using the Camarilla equation. These numbers here drive those numbers over there, and those numbers over there are the formula. As you can see, there is a big, not complicated, but a formula nevertheless that is indeed the Camarilla equation. And I find it very strong. It is what I used to use in my very, very early days of trading myself, technical analysis on the FTSE. I think in our live sessions, we'll probably give it some more, what's the word? Some more viewing time, some more, I don't know, some more time, some more effort, some more regard. Yes, like just checking, should I look at the 1 hour bar and do the calculations every time before entering a trade? You could, or you could also just, this is a 1 minute. You could look at the open, the high, the low, and the close on a 1 minute. The data will remain the same. You just got to highlight the open is 23,581. The high is, well, it's the high of that bar because he's the highest, and it's 23,632. And the low is, well, it's the low of that bar, 23,569. And the close is the close of that bar, which is 23,593. You don't have to flick to an hourly chart to do it. I just wanted to do it and show it to be a little bit more scientific for everybody so that they can see that it's not random. We are using mathematics to place our trades, to lead our bias, to make sure that we're not trading our own opinion. Those of you who know that we are just men, and whatever our opinion might be, it's wrong, and we may suck it up and take it on the chin. We're wrong, and we move on and use maths instead. There you go. We're 20 minutes into the recording. That's loads to go up onto YouTube. If anyone's got questions on Camarilla, I'll answer them if you fire them away. Otherwise, I'll end the recording here and say thank you everybody for watching, and we can move on to what it looks like on a proper chart, you know, one of our major, like the T2B2 or the buy it sell it, and just as a group have a little look at that. Alrighty, without questions, I'm ending the recording. Trade safe, watchers of the recording, and bye-bye. Thank you for watching. One of you might click like once in a while. You don't have to, but it would be nice. Bye-bye.